Hello, everybody. Thank you for joining me today. Hope your day is off to a great start and that you have some meetings lined up or maybe some events later if you're making it back out into the field. During today's demonstration, we're going to focus on distributions and taxes, two hot topics this time of year as we're heading into the end of the calendar year. We're going to focus on ways in YCharts that you can leverage data to help in those conversations and make your advisors make good decisions when it comes to a lot of this data or information. So with that said, I'll give you a little bit of background on myself. My name's Kyle Gears. I'm Senior Customer Success Manager for Enterprise Relationships here at YCharts for those who I have not had the chance to work with yet. I work exclusively with asset management firms to help the sales teams better communicate and engage with clients and convey their strategies, how they stack up versus other competitors, and how they can leverage our platform to communicate and win business. Been at YCharts for about 6 years. Other than asset managers, I've also worked directly with advisors, so understand the business well and try to lend my expertise where I can. During today's demonstration, we're going to cover 3 primary areas. We're going to start with identifying funds that your prospects or clients might own that are highly likely to make capital gains distributions in Q4. We'll also talk a little bit about educating clients on the tax impact of individual funds or products. And then we'll talk about the portfolio level, which is a huge conversation nowadays. You can actually input an advisor's model within YCharts, analyze it and understand it from a tax perspective, and even make some changes or a proposal to make that model or portfolio a bit more tax efficient. So let me go ahead and jump into the platform here and we'll get started. We're going to begin in the fund screener. So if you want to access the screener, you're going to go to Tools and Fund Screener. Fund Screener basically starts you out with the entire fund universe, and it's up to you to drill down into that universe based on the use case or the information that you desire. Your first step is always going to be the Modify button in the upper left-hand corner. So you click Modify, and a lot of times you might want to take an angle on a specific category. So let's say I have a great opportunity with my mid-cap growth fund. I want to see some competitors out there that might be paying out big cap gains toward the end of the year. How do I go about that? So first, I'll start with category name, US fund categories, and find mid-cap growth. That's my first step here. You can also create broader searches as well if you want to look across multiple categories. You don't have to use this filter, but this is usually the common approach. So we'll go ahead and narrow that universe down. I can also choose a specific share class if I'd like. If I only want to focus on iShares, choose my share class, institutional, and click submit. Now, when we're talking about capital gains and some of the data that we're using, one thing that we want to exclude due to their passive nature is index funds. We only want to focus on actively managed products. In order to do that, we're going to go to our Modify button once again, and rather than use this intersect option, which allows you to filter down by steps, we want to exclude those index funds. So I flip it over to exclude, scroll down, and it's more of an obscure category, but we're going to go to attributes and select index fund. So all the index funds are now out of there. Once again, due to their passive nature, they're not going to have large cap gain payouts. Now we've made it down to a list of 161 funds. The other angle that I might want to take is focusing on funds that are larger in terms of AUM. I might not want to really get funds that are 500 million, 100 million in this list of results because the opportunity isn't as large. So I'm going to create a metric filter here, use the equation option, which is the most common and most intuitive way to create this. And I'm going to filter this list down by AUM. So I simply type in AUM, you have total AUM and share class AUM. Most of the time I'll run with total, which aggregates all share classes. We're looking for funds that are greater than, let's call it 1 billion. So I can actually type a short code in here, 1B, B for billion, and hit enter. I'll go ahead and submit that. And now I'm down to 86 funds. Now here's the part where it gets interesting. How do we figure out, or how do we analyze cap gains and which funds are likely to pay those out? We can start pulling data in through the metric columns on the right-hand side. So first and foremost, we're going to want to pull in potential capital gain. This is a metric that we receive from Morningstar. Basically what it does is it looks at the underlying holdings of the fund, and it also looks at performance, whether that's unrealized or realized, appreciation or depreciation, and it divides by the assets. So the higher the percentage means higher possibility of cap gains. Does not mean that fund is definitely going to pay it out, but it's a great indicator. On the flip side, if you see a negative number here, that's going to mean that fund is going to be more tax efficient going forward because they have some losses they might be able to write off there. Next, we'll pull in turnover ratio. Higher the turnover ratio, the more transactions buying and selling, higher likelihood of cap gains. Next, distribution yield. And I like using distribution yield here. Opposed to dividend yield, distribution yield includes both long-term and short-term cap gains. So that's going to look over the last 1 year. And if you see a higher distribution yield, that means that particular fund paid out a large cap gain last year and might be a red flag or something worth noting. And then last but not least, another key component of cap gains being paid out could be redemption. So if you look at something like fund flows and funds have had negative flows, good chance they might have to pay out cap gains due to those transactions. And then the last series of data that we're going to add in here are tax cost ratios. And the question would be, well, what is the tax cost ratio exactly? And you'll see once I add this in, but in terms of the explanation, the tax cost ratio takes a look at the distributions over the selected period that are taxable and determines what amount was actually lost to taxes from your gains. So we'll go ahead and add in the tax cost ratios, and these are on an annualized basis. So the higher the tax cost ratio, the higher the likelihood larger cap gains have been paid out, the less tax efficient that fund is. So we have 9 items selected here. I'm going to go ahead and click submit to pull all those into the screener. Now what you can do here is you can sort by specific items. You can sort by potential cap gain or turnover ratio or distribution yield, just kind of eyeballing some of the data. We see this Hennessy fund, 80% in terms of potential cap gain. That's the highest on the list. We also see a distribution yield. 28% of that fund's NAV was paid out as a distribution over the last trailing year. We also have some year-to-date outflows and so on. Then you take a look at the tax cost ratio and you see higher figures here. So basically the 1 year here means that, based on whatever the gains were over the last year, you're losing 6% of those gains to taxes. That's assuming the highest federal tax bracket does not account for any state or local taxes. And that's something we get directly from Morningstar. But the question might be, well, how do I tie it all together? I can sort by different items. I can eyeball things. This is where a tool called scoring models comes into play. Scoring models is extremely effective in analyzing multiple data points. And you can actually pick exactly which data points that you'd like to use. So you can add scoring components one by one. So if we want to add those potential cap gains and the distribution yield and tax cost ratio, you can select all those and add them to the scoring model. Once you've selected those metrics, you can determine whether you want to penalize that metric or view that as a positive. So is a higher score better, or higher value better, or lower value better? And then you can place weights on it, determined by how important that metric is. But if I'm looking at everything across the board in my screen here, I want to keep it pretty consistent. I'm going to equal weight all of those items. And just for the sake of time, I've actually already created a scoring model, taking into account all of that information. So the scoring model is going to rank all of those funds based on their tax efficiency or the possibility of a cap gain being paid out. I'm going to go ahead and sort. So the number 1 means least tax efficient or high potential of a cap gain. And we have this PGIM Jennison Mid Cap Growth Fund coming up. So now I know some of the culprits in this category that could potentially pay out cap gains toward the end of the year. My next step would be digging in a little bit further. So if I click on the ticker, that's going to bring me to the quote page. And something that's often overlooked within the platform is the full dividend history. If I click on the data tab within the quote page and search for dividend, I can pull up the full history. So this gives me a really good idea of when that cap gain might be paid out. So if I'm looking at the history here for this fund, I can see around the second week of December, historically, that cap gain has hit. So if I know there might be an opportunity, or if I have any clients that hold this fund, I might want to notify them and stay on top of this. So as you can see, once again, usually second, third week of December, that cap gain is paid out, and it looks pretty consistent. So another resource for you to dig in a little bit to understand the history of cap gains being paid out. But by no means does that incur that it's definitely going to happen. Highly recommend checking the fund family's website in order to confirm. Couple quick notes on the screen that you've built, and that's consistent with anything in YCharts. Once you've built it, you can save it down and revisit it year over year. So if you click the drop down here, I go to save as, we'll just call it distribution/tax screen. And it's now saved. And one of the key points of saving this information down is how quickly and easily you can jump from one category to the next. So if I'm done looking at mid-cap growth and maybe I want to look at large cap growth, I can simply edit what I've selected, grab large growth, click submit. I have all the same information. I have my scoring model in there for the large growth category. You can also perform that broader search, as I mentioned. So if we get rid of the specific category, it's going to pull in everything within the universe. And now it's ranking those based on the potential cap gain or that scoring model. And for the folks in Canada, same deal goes here. You can use the modify button, rather than choosing something specific. You can come in, category name, Canadian fund categories, pull in your category. The one item I will note for Canadian products is we do not carry cap gains exposure. They do not provide that at Morningstar for Canadian funds. Moving on from identifying funds that potentially would pay out large cap gains, I'll talk a little bit about the tools that we have to quickly compare funds from a tax efficiency standpoint. So let's go ahead and dive into a quick flow. And the quick flows tab, if you haven't discovered it yet, it's a game changer, especially for meetings where you're in person or live. So within quick flows, you have a single quick flow and comparison quick flow, and ultimately get you from point A to point B, requiring minimal effort on your part other than entering in a couple tickers. We have a quick flow that revolves around tax adjusted return. So here we're trying to understand the impact of taxes on returns of certain products or certain asset classes. Within the comparison quick flow, I'm taking a look here at a couple tickers, a couple ETFs that track indices. So passive in nature, but one's a high yield taxable product and one's a high yield muni product. What's the difference between the two and what's the tax impact? I've chosen the tax adjusted return comparison, and that populates for us in comp tables. What does that give us? Well, let's go ahead and take a look. So it populates for us 3 columns for every period in terms of returns. So if you're taking a look, we have both of our products. We'll take a look at year to date, for example. The first column is going to be your standard total return. It's as of month end because we want to keep things apples to apples. Different products tend to pay out at different dates or times. So to ensure that we capture all of that payment information for interest payments or dividends, we are closing that off as of the end of last month. The middle column is going to give you your tax cost ratio. Once again, the tax cost ratio takes into account all of the distributions over that time frame and determines what portion of the returns were lost to taxes, assuming the highest tax bracket at the federal level. And then the third column is an adjustment for that tax cost ratio, which gives us those tax adjusted returns. So it's simply your standard total return minus the tax cost ratio, which leaves you with the tax adjusted returns. So if we're analyzing this, we can see in the first column, we have the muni product, or sorry, first row, we have the muni product. Second row, we have the taxable product. See the returns here, pretty straightforward, but then you look at the tax cost ratio, 0 for the muni product. The taxable product, we're losing 1.09% of those returns, 109 basis points to taxes. And then if you look back historically, you can kind of see the impact over the years. So you have every single time frame. If you're looking at, let's say, a 5-year time frame, yeah, the returns might be higher on HYG versus HYD, but you take into account the tax implications, you're losing about 2% annually to taxes on that taxable product, which leaves you with HYD as the winner due to its tax-free nature. So something that's really interesting, whether you're having a taxable versus muni conversation or working with a lot of ETF specialists. ETFs tend to be more tax efficient versus actively managed funds. And that's another angle that you can take here, or just in general, if your fund tends not to pay out big distributions versus a lot of your competitors, this is going to be a key use case for you to focus on with your clients or in your conversations from here to the end of the year. Now, we'll take this application and take a look at it when it comes to model portfolios. So if you ever have the opportunity to obtain your client's portfolio and enter it into the platform, you can do so through our model portfolios tool. Once you're in here, I have a couple sample models here. I won't spend a whole heck of a lot of time on creating the model, but ultimately you go to create and blank model portfolio. You can enter in the holdings as well as the weights. There's plenty of tutorials and instructional videos on how to do this throughout the site in the support section. So I'll skip that for now and really hone in on the use case. So let's say I've created a model here. We have Joe Advisor, ABC Wealth Management. I click into the model, I'm able to understand how it's allocated, what the breakdown is, what the expenses are, and so on. But I want to take a look at the tax efficiency of the portfolio. That's something that I can actually do within my comp tables tool. So if I go to tools and comp tables, I can pull in both the portfolio itself as well as all of the underlying holdings. So within comp tables, I'm simply going to type search for the portfolio I'm looking for, Joe Advisor, ABC Wealth Management, and the portfolio is in there. Next, I'm going to go to my list option and choose my list, model portfolio holdings, my model portfolio holdings, scroll down and find that same portfolio, Joe Advisor, ABC Wealth, click submit, and now I have all of the individual underlying holdings within that portfolio. Now what I can do is I can either pull in individual metrics or even save them down and use a metric set. So we're going to pull in some of the same metrics that we used from the screener and in that last example from our quick flow. So year-to-date tax cost ratio, 1 year, 3 year, 5 year, 10 year. You can also pull in the distribution yield as well as potential cap gains. So all the same information that we looked at in the screener can be pulled into the comp tables for analysis at the portfolio level. So we'll go ahead and click submit here. we'll get the data in to the comp table, and we'll have a good idea of what that breakdown is. So ultimately, what we'd be looking for here is higher numbers when it comes to the tax cost ratio. So looking for funds that might be not so tax efficient. You can also look at the distribution yield. Higher distribution yields we obviously want to stay away from, and then, as already explained, potential cap gains. So we might have a good idea of, hey, if we swap out a couple of these funds for ours or change some weightings around, we can create a more tax efficient portfolio for you and your clients. How do we do that? We'll go back to our model portfolio section, and we have our two portfolios here, our single portfolio here, I should say. And you can even drill down with this new filter here, which is nice. So you might have a couple shared portfolios from colleagues, but if you want to only see yours, you can choose that box. If we only want to see Joe Advisor's portfolio, we can apply the name filter just to narrow that down. So here we have Joe Advisor ABC Wealth Management. All I have to do to start tinkering with the portfolio or make those tax efficient changes is click the arrow button and then duplicate. And that's going to open up a new portfolio for you, a dupe of the original, and allow you to edit the items. Highly recommend changing the name as well, based on what the idea is behind the change, but you can come in here, change the tickers, and change the weights. Just for the sake of time, I've already created a separate model, changed around a couple things, and just to kind of keep it simple, I just used index tracking ETFs. So basically replace some of the equity products, some of the large growth, large blend products in the portfolio with SPY from a tax efficiency standpoint, and then scaled back some of the fixed income allocation and entered in MUB. Once again, just keeping things simple using index tracking ETFs. So now we want to see how exactly that might look. So how do we match those things up? If you go into the overview page for one of the portfolios, so you just click on it, for example. Once again, we're going to use quick flows here. So if you go to quick flows, hop over to your comparison quick flows, here you can actually use portfolios as well. So we type in Joe Advisor, here's our original, and then we'll also search for the portfolio that we created with those tax improvements. So now we have those in our quick flow option. We scroll down and choose tax adjusted returns, and that's going to calculate a comp table with those tax adjusted returns. So if we're taking a look at the tax impact here, once again, similar to the example that we looked at for the taxable high yield ETF versus the muni high yield ETF, exact same setup. So you're going to have your standard total return, you're going to have your tax cost ratio, and your tax adjusted returns. And once again, it's always best just to get an understanding of how that breaks down and what you're losing to taxes. But ultimately, you can see we've lowered the tax impact on the portfolio. And if that's something that's important to the advisor, you're helping them and their client out by doing so. Once again, just an example, but this is how you want to navigate the platform and leverage the platform in those conversations, especially if you have the advisor's portfolio. So as far as today's demonstration, that's all I had planned for everybody. We're going to open it up for a Q&A here momentarily. And as far as the recording goes, that'll be sent out most likely on Monday. And I will also send out a link that includes the screen that I built out within the fund screener to identify funds that have a high probability of paying out cap gain. But quick question in regards to the comp table template. We necessarily don't have a template. However, I will send out what I've used within the fund screener. I'll send you the exact same screen that I built for the demonstration. And as far as anything past that, a lot of that was built with quick flows. So if you go to the quick flows and comparison, the tax adjusted returns comparison is what you're going to want to focus on there. If anybody has any additional questions, please feel free to use the Zoom module to fire those over. If not, feel free to reach out to me as well. Looks like there was actually one more question in regards to turnover ratio. Turnover ratio is based on the last 1 year of holdings. Also worth noting that the cap gains exposure data point is updated on a monthly basis. So that's updated, updates every month end. So it's going to be relevant. It's going to be accurate when referencing that. All right, looks like that's it for the questions. So if anybody comes up with anything after we wrap up the call, please feel free to reach out to me, Kyle at YCharts.com. That's KYLE at YCharts.com. But hope everybody has a great rest of the day and talk to you soon.